Welcome to Ask a Property Manager, episode number 114. We've got an interesting news story for you today out of Canada. An investment group flop left 500 homes and 120 investors holding the bag. Stay tuned. Today we're taking a look at a news story out of the city of Saskatoon, Canada. It's a story you may find a little bit familiar. There have definitely been similar stories in the past. But essentially what happened here was an investment group was taking on funds from investors, not using the funds in the way that they were supposed to be used, and ultimately the entire organization flopped, leaving a ton of investors stuck holding properties that, frankly, they didn't know how to handle. This article comes to us via Yahoo News Canada, and it was originally published by the CBC. We're going to go ahead and pull that up on screen here. Real estate company collapses, 500 homes affected, 10 million from investors across Canada missing. Carolina Abramovich says the investment appealed both to her pocketbook and to her conscience. The Vancouver biomedical scientist is one of 120 investors who gave unsecured loans of between $50,000 and $500,000 to the Epic Alliance Group companies of Saskatoon. I heard about Epic Alliance with real estate investment groups. They were really everywhere, she said in an interview. Excellent reviews from anybody that invested with them, small or big. Real estate investment groups, podcasts, webinars, they were everywhere. While it seemed to make financial sense, Abramovich said that she also fell hard for the company's origin story. The story behind the company was great. Try to help investors with their investments while providing affordable housing in Saskatoon. I like the fact that they were women and that they were promoting trades for women. The Epic Alliance Group of companies shut down its operations at the end of January. Its investors and property partners learned of the collapse in a 16-minute Zoom call from the company's founders, Rochelle Laflamme and Alicia Thompson. Everything is gone. Everything is bankrupt. It's all gone, Laflamme said in the January 19th, 2022 video. The news of Epic's collapse went off like a bombshell in real estate and business circles around the country. Investors wanted to know what happened to their money. Landlords across Canada wanted to know who would manage their properties in Saskatoon. And real estate professionals worried about what would happen to the hundreds of core neighborhood homes. According to Laflamme and Thompson, Epic Alliance controlled 504 properties in Saskatoon and North Battleford, valued at a combined $126 million when it fell apart. The pair spoke to investors in an Epic Hour video posted early in January, only weeks before the company shut down. The majority of the properties, a combined $115 million worth, are in Saskatoon, Laflamme said on the video. Through its network of companies, Epic acted as landlord and property manager for more than 400 rentals in Saskatoon's core neighborhoods, including Pleasant Hill, Riversdale, and Meadow Green. They manage these homes for out-of-province investors through its hassle-free landlord program. These investors, primarily in British Columbia and Ontario, are now suddenly long-distance landlords responsible for the properties. Two former Epic employees say that as many as half of these homes are vacant, with many boarded up and in dire shape. The fear of the local real estate community is what might happen should dozens, if not hundreds, of these homes hit the market at the same time. The head of the Saskatchewan Realtors Association says it's closely tracking monthly stats to gauge the impact. We're not seeing evidence of a crisis in the market, and I think it's too early for that. Chief Executive Officer Chris Garrett said in an interview, I would certainly think that it is a crisis for those who have invested because of the quantity involved. Earlier this month, in a separate development, Court of Queen's bench Justice Alison Rothery assigned accounting firm Ernst & Young to investigate what happened to the estimated $10 to $20 million that the investors have placed with Epic Alliance. The company was not licensed to sell investments or other financial advice, or offer financial advice, according to the Financial Consumer Affairs Authority, which issued a temporary cease trade order on October 21st, 2021. In November, the FCAA held a hearing to consider extending that order. At that time, declarations and supporters of the Epic Alliance indicated that the temporary cease trade order was negatively impacting Epic Alliance's business, and that order was lifted on November 16th. Saskatoon lawyer Mike Russell represented the 120 investors when they applied to have the special investigator appointed. They want to find out what happened to their money. When asked by the CBC to describe what happened with the company and its various programs, he replied with two words: epic fail. The Ernst & Young investigators are due to present their findings to the court in late April. Until then, a partial picture of what happened emerges through court documents, interviews with former employees, and the words of Epic owners Rochelle LaFlemme and Alicia Thompson. CBC reached out to LaFlemme and Thompson through their lawyer to speak to the allegations, and they did not respond. However, they did leave behind hours of video sessions posted online in Epic Hour episodes promoting their business. The pair created Epic Alliance in 2013. It soon evolved into a web of named and numbered companies, including Epic Alliance Real Estate, Epic Alliance Electrical, Epic Accounting and Bookkeeping, and Epic Holdings. It had a total of 118 employees. They created and ran three main ventures. A loan based on promissory notes, a fund-to-flip program, and a hassle-free landlord program. This is where the article really starts to get interesting because it breaks down how the actual operation worked. Russell, the lawyer representing investors, detailed in a law brief supporting the application how it appeared that the three Epic offerings overlapped and worked together. His analysis of these relationships is supported by online promotional material from Epic Alliance. The company built up its $10 million pool of capital over 8 years by enticing people to give Epic between $50,000 and $500,000 in exchange for a promissory note. These single-page notes, of which multiple examples were provided in affidavits, were models of simplicity. They featured the loan amount, when the term began and ended, and the interest rate. The rate of return varied from 15 to 20%. You have a pool of unsecured funds that can be used for whatever. There's no specific purpose given to those funds when they're loaned, Russell said. The fund-to-flip program had investors buying homes through Epic, doing improvements and upgrades, and then selling for a profit. The company's promotional material suggested a 10% return on a one-year investment. Finally, Russell said the hassle-free landlord program had investors, most out of the province, buying homes and acquired by Epic through the fund-to-flip program. The investors took out the mortgage on the home, and Epic took responsibility for everything from finding tenants to maintaining the property. It offered the investors a 15% guaranteed rate of return. The promissory note program is what attracted the attention of the government regulations, leading to the October 2021 cease trade order. The order stated that Epic had given information and advice on how to invest in securities, including real estate investments and promissory notes, without ever having registered as dealers or advisors. Russell said he first became curious about Epic when the FCAA issued its October order. I couldn't figure out how the products we're offering made sense together, he said. In her letter March 14th, assigning the inspector, Justice Rothery detailed how the company had contravened the FCAA order. Although the respondents had executed an undertaking to the FCAA on September 22nd, 2021, agreeing not to conduct any further trading in securities, they continued to engage in business trading and advising in securities in Saskatchewan without registration, she wrote. She added that after the January 19th video call dissolving the company, as recently as February 23rd, 2022, the respondents have been selling assets online from their warehouse located at the corporate offices for Epic Alliance for cash only. So essentially, they're just taking the cash and running with it. Adam Elliott began working at Epic Alliance Properties in August 2020 after being a property manager in Saskatoon since 2011. He filed an affidavit in support of Russell's court application to appoint the investigator. He says he spotted red flags on his second day working at Epic. Generally speaking, residential property management works off fairly high occupancy rates. You need to have 70 or 80% occupancy to make your business make sense, he said. They were running close to 50% or lower, which is unsustainable if you actually want to make money. Further, the company used rent projections that Elliott considered out of step with the realities of the homes and their locations. Elliott said his epiphany on how the company thrived for 8 years came when he spoke with fellow workers. I was like, oh, we're an investment company. I realized that most of the business, like the way the company was keeping afloat, was through investors. The company was able to pay investors a high rate of return, even with low occupancy rates and unrealistic rent projections, by continually bringing in new investors and fresh money, he said. Sounds a little bit like a Ponzi. Lindsay Ranks began as a receptionist at Epic, then moved into the administration and property management side. Like Elliott, she filed an affidavit and also struggled to see how the company could make good on its financial promises. The money didn't add up, she said. I couldn't figure out where they would be getting that much money, especially if 60% of the properties were vacant and not even able to be rented because there was so much work needing to be done. Ranks reached a similar conclusion as Elliott. There was always more investors and more properties, and that's how they continued to get money, she said. She reiterated this allegation in her affidavit. Rochelle LaFlamme and Elisa Thompson organized a video call with investors on January 19th, 2022. The 16-minute presentation is where the people with promissory notes learned that their money was gone, and where the people in the hassle-free landlord program learned that they were now, in fact, landlords. Sitting in front of a whiteboard, the pair began with a blunt message. Unfortunately, we don't have any good news. We don't have any good updates, LaFlamme said. We just couldn't come back from the cease trade order. The FCAA effed us, so that's it. LaFlamme did most of the talking, telling investors how we are trying to hand over 700 properties and put together investor packets to explain to new landlords how to move ahead. She had a grim update for the financial investors. Everything is gone. So the shareholder stuff, it's gone, LaFlamme said. Everything is gone. Everything is bankrupt, guys. It's all gone. Justin Howard's a rental manager with Elite Property Management in Saskatoon. He said his office started getting calls from new out-of-province landlords within days of the January video call. I've got 40 people in the queue that want to sign up with us. We're having a hard time keeping up with all the properties that are being brought on. There's never really been a situation like this in Saskatoon, he said. It's very rare in the property management sector to have so many properties just suddenly appear. Russell echoed those comments. I've never seen anything like it, he said. The investors he spoke with, who are now landlords, are still in shock, he said. All of a sudden, as you can imagine, your task list just increased significantly what you intended to do that way, that day, that week, or that month, he said. Because now there are a number of things from utilities to appliances to frozen pipes. Russell said he remains troubled by how investors learned what happened. The principals blamed the FCAA and essentially said, we're bankrupt, and of course people use bankrupt to mean we're insolvent, but they're not actually bankrupt like they've filed something, he said. They did give back the keys to some of these properties. It's not like they disappeared. They stuck around, they handed out the keys and so forth, which was a good thing to do, but typically you'd seek advice and you'd make statements as needed. There's a process. Carolina Abramovich said she'd like to get her money back, but she's not optimistic. She wants LaFlamme and Thompson held accountable for the missing millions. So we're going to go ahead and I'll jump back over to reporter view here. There we go. So, I mean, it's a sad story, but it's a tale that's as old as time. There's been people more than once that have been screwed using this exact method, and it still continues to happen. So how do you prevent something like this from happening to you? So first off, if you're investing in real estate, direct ownership, in my opinion, is always the best case scenario in terms of control of the property. Giving somebody a promissory note that's not actually tied to a specific property, you're not, the mortgagee on a property or the mortgage holder on a property, you're just giving a blank promissory note, and these funds can be used for whatever. That's a colossally bad idea, and I think that the article obviously proves that, and I'm sure that these investors now understand that as well. I think that there were probably some investors in this, arena that were a little naive and didn't fully understand what it was that they were investing in. And in some instances, I think that there were probably other investors that did know what they were doing and made poor decisions. Some of these investors have just lost cash money, and some of these investors are now stuck with properties that may not be worth what they paid for them, or may not be occupied, or even may not be able to be occupied. You may have to go in and do a bunch of rehab work on a property that you already paid market value or more for, maybe, before you can even get the thing occupied. It's a bad situation to be in. By purchasing your assets directly, you remain in control of that asset. If you choose to hire a property manager at that point, you're the one working with the property manager directly. It's not third party through some management group where you can't talk to the property manager. When you're direct asset control, you have a lot more direct communication and input with that property manager. Even if it's something as simple as being able to ask questions or something like that, it's worth the comfort of knowing that you have the direct access to the property manager there. If you are looking for something that's more passive, a little bit more passive investment, my recommendation would be look into a real estate investment trust or something like that that might be publicly listed, something along those lines. You want something where there's oversight because obviously you're not going to be spending the time on oversight yourself. And because of that, you're typically going to wind up with a little bit smaller return than if you were doing direct asset control. But no matter what you do, if you decide that you're spending money and you're paying a third party to handle an asset, purchase an asset, whatever the case may be, you need to do your research first and understand what it is that you're getting into. Don't go to the point where you have analysis paralysis and you never pull a trigger and you never make a decision, but at least understand what you're signing, who you're sending money to, and why you're sending that money before you sign and send. That's pretty much it. That's all I can recommend. Thank you so much for watching. I appreciate it. If you learned something from this video today, do me a favor and share it with a friend or family member. If you found this style of video interesting, do me a favor, hit that like and subscribe button. If there's something that you want to see that we're not covering, let us know in the comments and we might cover it in an upcoming episode. Again, thank you all so much for everything. Thank you for watching. Drop your comments and questions down below and we'll talk to you soon.